We have with us Asad Daud, the MD at Aeroflex Industries, joining in on the show, in fact, to highlight what the visibility going forward is like. Asad, hi, morning. Good to have you on the show. Congratulations, firstly. It's been a bumper listing for you. But now that it's behind us, let's talk about your growth in the near term. Given that about 80%, Asad, of your revenue comes in from exports, tell me what the export demand environment is looking like.
So first of all, thank you so much, and I would like to thank the likes of investors who have shown faith in the company and who have contributed to an incredible success of our IPO. So about 80% of our sales is from exports, and we expect the same trend to continue in the near future as well. Export demand, especially from America, looks very positive, and also Europe is also now slowly, recovering back from the Russia-Ukraine war, and we expect the demand in the next few months to continue and to be strong.
The China plus one policy the world is following, is this largely reason why you're growing?
So that is one part of the reason, but another part of the reason is that in our sector, China is still not that big of a competitor as compared to the likes of Japan, South Korea, and even the companies in Europe and USA. So in our sector, China is not so much of a competitor. We compete directly with companies manufacturing in Europe and USA, and also in South Korea and Japan.
Client concentration, how much of your total revenue is coming from top 5 and top 10 clients?
So approximately top 5 customers would contribute about 25 to 30% of our overall revenue, and top 10 would be about 32 to 33%. So we don't have a lot of concentration on our top 10 customers.
I was just looking at your financials as well. While you've registered a very strong growth over the last 2 to 3 years, but now say over the longer haul, 3 to 5 years, how much revenue growth are you targeting? And do you think you'll be able to clock a similar run rate, if not better?
So if you see the last 3 years that we have been growing at about 35% CAGR on our top line, and we hope to at least maintain, if not better that over the next 3 years with our plans to go into. So we have a fold strategy which we are planning to enter into, where we increase the sale of the component business, we increase the sales from the new industries, and we are also looking at inorganic acquisitions as well.
Why are you looking at inorganic acquisitions? If you're sounding solid and strong about your own growth per se, you don't need to acquire.
So in our business, there is a lot of components that actually go into ultimately, making our product. So hence, currently we're buying those components from outside. So we want to ultimately have a manufacturing of that components as well. And in terms of forward integration, so we right now in the export market, we are supplying to a lot of our channel partners. So we intend to have our presence more deep in especially the European and the USA market, and hence we are looking for forward integration over there as well. So eyeing both backward and forward integration. So.
Supply your products to various industries like, petrochemicals, steel, gas, EV mobility, etc. Tell me which segment is contributing maximum to your revenue, and where is it that you foresee growth, say, in the next 3 odd years?
So currently, if you see our numbers in terms of fire sprinklers is one area where it is contributing a significant portion to our revenue. Then obviously the traditional industries like oil and gas and steel. But now we have also planning to diversify our products into offerings into the solar, which we have just recently launched, and also into aerospace and satellite going ahead, because those industries, they require a much higher quality product, and obviously they have better margins as well.
Okay. When you say that Europe and US, they both have stabilized, and if that was missing in last 12 months or last 24 months, that means growth is normalizing, which means that if both these geographies are stabilizing, one because of slowdown, other because of war, then is FY24 and FY25 be like a bumper year for you? Because both you've grown when things were tough. If things are better, then you should not grow, then you should explode.
Yeah, so our so last year, obviously our targets were much higher than what we achieved. It was obviously due to the Russia-Ukraine war, which had a slight, decrease in our overall growth percentage. But this year we're already seeing, at least in the first quarter and about 1.5 months or almost 2 months in this quarter now, we are seeing a good trend and a good demand from USA and Europe, and hopefully we'll in the next at least in the end of this financial year, and hopefully in the next year we'll see good growth in from these especially these two markets, because these two markets contribute almost a major portion of our export sales.
You also, tell me a little bit about what your capex plans are and how is it, now that you are debt free, how is it that you're planning to fund expansion plans?
So we have already started working on our plan for capex. We are already revamping our machines, to enable the same machine to give a higher output, and we are already planning to to increase our capacity through these revamping of our machines, and be doing everything through our internal accrual. So we will not be raising any more funds from debt or equity in the next couple of years for our expansion, and we'll be so the next phase of expansion. So we are planning to do it in two phases. Phase one would be completed by March of this financial year, and phase two would be completed by March of the next financial year.
Great to have you today on ET Now. Thank you so much for taking the time out and speaking with us today.
Thank you so much for inviting me.